Looking at the market texture, you're watching closing trades right here on ET now, and we've completely flipped into the red right now, given up those early gains, and we're now 18 points lower, so pretty quiet once again, barring that Wednesday recovery that you saw post-policy. It seems like pretty much status quo and a range-bound index so far. While, of course, metals continue to be the ones which are standing out, there are a couple of private banking names as well in there. Axis Bank, for instance, is higher by about 1.5%. Kotak has made a decent move, up 1.5% in the green, but I can't say the same about an ICICI Bank or an HDFC Bank. Kunal, you think there is a clear distinct move now between ICICI Bank and HDFC Bank stepping back a little bit and maybe Axis, Kotak, Innocent taking the lead?
Yeah, it's a good point, Aisha. And yes, I think that's what the prices are showing, tilt towards only very few private sector banking names. I'm not sure whether we can add the other names like, for example, RBL Bank in the same breath. But I think there are very few private sector banking names which are showing signs of very good price volume action, more delivery data, more encouraging delivery data towards Axis Bank and Kotak Bank. And I think more importantly, what we've seen for Kotak Bank is, when the stock managed to break past about this 2100 mark, this is a very good breakout in terms of closing of the gap for Kotak Bank. Axis Bank is a follow-through price uptick. After that, I think 8 or 9 days of a consecutive price uptick till mid of September. So I think that's a very strong indicator that we are looking at a better tilt towards the private sector banking names and not the usual ones which were doing very well for themselves in 2024-25. But then on the other hand, I would believe that once the skew becomes towards one-sided, say towards Axis and Kotak Bank, it would actually mean that there would be a point where ICICI Bank and HDFC Bank would also play a very good catch-up for themselves. So I believe that it should be a two-pronged move for short-term traders. I think so far the momentum is in the favor of Axis and Kotak Bank, but I think eventually you'll find a point where the risk reward would start to look attractive for ICICI and HDFC also.
Interesting one, but we'll keep you clued on with regard to developments with regard to banking, because we'll have a slew of updates which will come over the weekend as well. So we'll have to be on top of that come Monday morning. But Kapil Shah also joining us at this hour. But let me quickly also address the flashes at the bottom of your screen, because what we're seeing is Panacea Biotech. They've got a letter, they've got an order win from the UNICEF for supply of bivalent oral polio vaccine with effect from 1st of April, and the order is worth approximately 315 odd crore. Q2 calendar year 2026 and calendar year 2027 thereafter is when the supply starts. Of course, the stock booked up 4% on the back of that, and in fact from the lows of the day, much more than that. That stock also in focus. I want to quickly though take it across and give quickly ask Sudeep a question with regard to pharma, because that's a basket which we don't talk much about, at least at this point. Nothing much happening there, but plenty with regard to tariffs. Sudeep, how do you view that basket?
Well, I think, you mentioned the word tariff, and I think that's the biggest uncertainty surrounding it. We have probably dodged the bullet at the first instance, apart from Sun, which had some, branded drugs. Most of the other companies are not affected at all by the current tariff regime notified by the US president. Even Sun, I think with the developments which happen subsequently, they will also dodge the bullet. But having said that, I'm a little worried on the CDMO players. You see, they're not directly impacted, definitely, but the insistence on investment in US may lead to a lot of these large multinationals putting up facilities in US, and the order flow or the future order inflow to the CDMO players may dry down, and there may be challenges going forward. So it is not a primary impact at this stage, but the secondary impact or the tertiary impact of the CDMO players may come in. So I'll be cautious on the entire pharma. And remember that this entire tariff, for lack of better word, tantrum hasn't yet ended. There can be more, and we need to be extremely cautious. So if somebody has to look at pharma, and this view I've been maintaining for quite some time, look at domestic pharma companies or companies having significant business in the domestic market. Domestic Indian pharma is growing by about 25% CAGR. Let's focus on companies focused on domestic market and also markets, non-US markets. I think that's a better bet to take as of now. We have been liking Mankind Pharma for a very long time, and we continue to maintain our view on that. They have about 95% of their business coming from domestic sales. So let's look at companies which have got limited exposure to US at this stage. That would be a better strategy.
Well, talking about pharma, Wockhardt clearly was the one star performer in the last 7 trading sessions, and it seems that they've already applied to seek the US FDA nod for their miracle antibiotic, that's Azenic. In fact, we should just bring up, the sound bites as well from when we did speak with Habeel Khorakiwala, and he was indicating that within the due course of the week, they would be applying to the US FDA. But Kapil, on the charts, any pharma name looking good to trade?
Yes, first of all, good afternoon to everyone. So on the pharma front, there are very few stocks out there which has shown the very strong outperformance. But today we are seeing that there is one stock like a Granules. It is from past 3 trading sessions, it has been moving quite high, and today it has broken out a kind of the 100 days consolidation patch of kind of thing. Means the 550 was the immediate hurdle which has broken out on the higher side. So we anticipate that up to the 540 level, this particular stock remains on the positive side. So it can be viewed as a kind of the accumulating stock, not outright buy at one go. And on the higher side, the upside potential can be around the 585 also.
All right. Okay. Thanks for that view coming in, Kapil. Kapil, sorry, just taking a step back, trying to understand your view on the index and the Bank Nifty, the Nifty 50 and the Bank Nifty.
So yes, first of all, coming to the Nifty 50. So Nifty 50, after the 7 to 9 trading sessions, the declining momentum, it has come to the lower band. I think from past 90 trading sessions, the broader range for the market has remained 25,200, 300 on the high side, and 24,500 to 24,350 on the lower side. We are a little bit middle to the lower band kind of the things that we have been seeing. But after the 9 days trading sessions decline, we are seeing some sorts of a resumption is happening. But we will become more firmly bullish on the market once it starts to sustain above the 25,000 level. Till then, we are a skeptic and sideways to negative view. But on the contra side, yes, 24,500 to 24,350 can act as a good support level where the buying interest can be garnered. And as far as the Bank Nifty is concerned, so Bank Nifty has underperformed a lot earlier, but nowadays we are seeing some sort of uptick into the private banking sectors, and PSU banks continues to move on the high side. So relatively strength has been better off for the Bank Nifty. Right now the 55,600 level is trading on. So we are seeing some sorts of a further uptick, and at least on the higher side we see the upside potential around 56,200 level.
Okay, that's the take coming in on what you're seeing on the charts for a Nifty Bank as well as the Nifty. But Sudeep, you think a part of the GST benefit could also trickle down to players like a V-Mart or a Style Bazaar perhaps?
I'm pretty confident about both the names you mentioned. I think, though we may not see it immediately flowing, but definitely incremental income in the hands of common man will help V-Mart Retail as Style Bazaar and the other value retailers going forward. We have already entered a festive season, and I think it continues till end December at least. So it's a pretty good quarter when I think they will definitely see incremental sales. We understand that there has been improvement in the rural income scenario and even urban income scenario. And, unless we see some major reversals in the climate whereby massive rains affect life in October, I am expecting much better performance from these value retailers in Q3.
Okay, Sudeep, hold on to that thought. Let's take a very quick break on that note. When we come back, we'll continue tracking the last lap of today's trading session.
Welcome back, and you're tuned in live from the SBI Live studio. You're watching Closing Trades here on ET Now. Quickly on to one of the top stories of the day, and Sammaan Capital all set to raise $1 billion. And this is, of course, the Abu Dhabi International Holding Company, the IHC, which is likely to hold a 41.2% stake and the promoter status post this infusion of around 8,850 crore, and this also will trigger an open offer under SEBI regulations. We caught up with Gagan Banga, who is the managing director and CEO of the company, to know about their borrowing plan, listen into what he had to say and their outlook for the company.
NBFC business in general is a levered business, and therefore, while unlike businesses where you're manufacturing A and tomorrow you can use that waste to start manufacturing B, C, and D, here you don't have that flexibility, right? You're a monoline sort of a business. Plus, you're also taking ownership of practically backing up a large quantum of debt, and that large quantum would be by 2028, our borrowings would be in the range of 1.2 lakh crore. By 2030, they will be in the range of 2 lakh crore. So if you're backing up that kind of capital, it's a very, very onerous responsibility. Fairly confident that by fiscal 27, our AUM should be 1 lakh crore. And if we were to look at getting the right ROA type of numbers, by fiscal 30, we want to get to $1 billion of profits. So those are the two goals that we are looking at. One is 1 lakh crore of AUM by fiscal 27. The other is $1 billion of profits by fiscal 30. If we've done large technical write-offs, we continue to recover from them. Those recoveries should be trapped in the balance sheet and should not be released as profits, at least till the time that we are back to business as usual. So we will continue to trap. If there are recoveries, you will see elevated credit costs because we'll turn them back into provisions and they will come as a provision line. That's the way that accounting statements are presented, right? So our steady state credit cost would be 100 basis points. And the aspiration is that by the time we are in fiscal 27 and this 1 lakh crore AUM is achieved, all of that 1 lakh crore AUM is AUM and is not growth, legacy, and whatever else, right? And we will continue to follow the guidance on the legacy unwind that we've already provided.
Okay, that's that on Sammaan Capital. And Sudeep, the capital market theme clearly continues to look smart, other than, of course, NBFCs, which we just flagged off. But within that, given that there is quite a bit of churn happening there as well, today, for instance, it's Nuvama, which is holding out. Earlier this week, there were some other names, and, it's been a spree of them which have been seeing a fair amount of traction. Anything which is looking good for a buy even now?
Well, from a long-term investor's perspective, Aisha, I would still recommend buying the market infrastructure-related companies. So we are talking about here NSDL, CDSL, as well as CAMS and KFintech. I think these are good for long-term hold, long-term investors. The valuation isn't cheap, and NSDL after listing went up and then significantly has corrected. And post-correction, it is becoming a realistic valuation from a long-term investor's point of view. They should have never got a valuation multiple more than CDSL, considering the way their income streams are constituted. But now, after correction, it does look good. As far as KFintech and CAMS are concerned, I think their expansion into multiple products, apart from mutual fund, back-end work, will give them significant upside going forward. Also, the expansion into international markets should take them to different level going forward. So I'm pretty confident about these stocks. As far as the exchanges are concerned, BSE is expensive, and I'm still a little cautious about the valuation, considering that we need to understand what the new F&O regulations, as and when they come, are going to be and how they're going to pan out from a P&L point of view for BSE. But I have no hesitation in talking about MCX. I think the potential is significant. Part of it has been exploited. Part of it still hasn't been exploited. And probably going forward, we will see that getting fully exploited. So MCX from a long-term investor's point of view does look good, even at current levels.
Okay, that's MCX, which is still looking good to Sudeep. But Sudeep, great to chat with you. Thanks as always for your time. We'll let you go on that note. Okay, let's move on and let's address the big buzzing sector, and that's got to be metals. And that index is soaring in trade once again amidst another tepid market day. Ashesha is here to tell us what are the key triggers behind this move. Ashesha?
Well, yes, metal stocks are buzzing in trade in an otherwise tepid day, as you mentioned. In fact, Nifty Metal Index is up a whopping 2%, which is the biggest sectoral gainer in trade today. We have Tata Steel, that one is up 3.5%, the biggest gainer on the Nifty 50 Index. Some other stocks, the likes of Hindalco and JSW Steel, are also holding on to gains of nearly 1 to 2.5% in trade today. Several news pieces. One, of course, global market uncertainty seems to be on the rise, and that is the reason value of hard assets seems to be increasing in the global market. Let's talk about copper in particular. That one has hit an all-time high on MCX today. Even in the global market, remember, copper prices have crossed that $10,500 per ton mark. An uptick of nearly 3% is what we have seen this week so far. So clearly global prices, global commodity prices continue to see an upsurge. Apart from this, there is also a report which suggests that European Union is considering imposing additional tariffs on import of steel into the EU, into the European region, and this is likely to weigh heavy on the global demand-supply dynamics of steel. Several of these steel stocks continue to remain in focus. So yes, metal stocks, in fact, not just today, they've been buzzing for the last several trading sessions, but today it continues to remain in focus, and Nifty Metal Index is the top sectoral gainer in trade today.
Okay, about metals, Kunal, where do I begin?
I think it's across the board for many of the metal stocks. What was missing for the metal sector was a cohesive breakout, because I think till last week or so, or till mid part of this week, you had Hindalco, Jindal Steel, which were doing well. Vedanta had its own struggles at this 460, 470 mark. Tata Steel was the odd man out, going into a corrective phase. JSW Steel was more sideways. So it was all over the place for the metal stocks. Today, it's more of a synchronized move where you've seen Hindalco breaking past about the previous bands of resistances. Tata Steel coming back to that 170, 173 breakout. JSW Steel making a new swing higher, at least on the shorter term charts. And then SAIL, Vedanta, etc. to add. So I think this is a very strong move. And till last week, there was this tussle between Nifty Metal and the Nifty PSU index amongst the top two sectors, because I think over the last 4 or 5 days, we had seen the Nifty Metal index one day being one of the top sectors, moving up higher. Then the PSU banking was the other sector which moved in the next day. But I think after today's breakout move, I would actually believe that Nifty Metal index would stand a little bit more stronger than the PSU banking index, of course on a relative basis. And the move which we've seen for many of the stocks today, the likes of Hindalco, etc., I think it should see a follow-through up move going forward.
Well, not just metals, but crude. That's managed to snap its 4-day losing streak. Ashesha, what more details are you picking up on the factors at play and where it might head from here? Okay, got disconnected with Ashesha, but crude, of course, is something that we're also monitoring very, very closely. Kunal, that reminds me, OMCs had quite a field day all through last week. What's the trade here?
No, I think it's a very good zone to buy the OMC stocks, Aisha. I would actually believe that, I think Wednesday, we had many of these OMC stocks going into a mild correction from their previous highs. But the way these stocks are heading towards a breakout, this is a massive breakout for many of these oil marketing companies. More interestingly, I think what we are looking out for is a breakout of a major highs which were formed in 2024 for these stocks. So it's it's more of a time-wise pause, a price consolidation and a correction, and then a retest back towards the previous highs. That I believe should push the momentum further for many of these OMC names. So very bullish on the entire pack. HPCL is something which I have been recommending over the last few days, and I sense that the stock should be good for at least another 10% upside over the next 1 to 3 weeks at least.
Let's take a very quick break. It's only metals which are still holding out while the Nifty continues to flicker in and out of the red to the green. Let's see where the last half an hour actually takes us. For now, we're going to take a very quick break. back with closing trades right here on ET Now and back to crude as well, and back with Ashesha to highlight what's going on with crude. Ashesha?
Brent crude has snapped its 4-day losing streak, but remember, this week so far Brent prices have declined over 8% and it has now fallen below that $65 per barrel mark, and all eyes are on OPEC Plus meeting that is scheduled to happen on Sunday, and largely the expectation is that OPEC Plus will consider another round of output hike for the month of November as well, and traders are penciling in 5 lakh barrels per day of output hike that could probably come in the meeting that is scheduled to happen on Sunday. Largely, the expectation of supply glut is increasing in the global market, and that continues to weigh heavy on global crude oil prices, and that is precisely the reason Brent crude has now fallen below that $65 per barrel mark. But remember, on account of expectations of supply glut, brokerage houses continue to remain bearish. In fact, we have Macquarie, which is penciling in $60 per barrel target price for the third quarter of next calendar year. Citigroup, they've given a target price of $62 per barrel. JP Morgan at 57 and Goldman Sachs at $54 per barrel. But largely, we are expecting about 5 lakh barrels per day of output hike that could be announced by OPEC Plus for the month of November, and that continues to weigh heavy on global oil market.
All right. Thank you for that take, Ashesha, with regard to crude, of course. But let's go across. We have Jonathan Shizel, Deputy CIO at Westminster Asset Management, joining us live. Great having you, Jonathan, and great chatting with you. This is Harsha. I want to first start off by asking you, what's the take with regard to the latest happening in the US, especially the government shutdown? How long are you expecting the shutdown to last? What kind of an impact are you penciling in on the US economy and the second order impact in emerging markets, including India? What's the sense?
All right, good afternoon.
Good afternoon.
Yeah, look, it's extremely difficult to have any insight really on how long the government is expected to be shut down. It seems to be clearly both parties are very intractable in their positions. So this could carry on for some time. But quite frankly, the amazing thing is, most asset markets, equity markets in the US still continue to grind higher, despite all what is going on within the government there. So, yeah, for us, obviously, I think the whole development remains dollar negative, and clearly it's giving further impetus to precious metals and gold, which has obviously been pushing up to new all-time highs whilst this has been going on. But, equities as such, and indeed, if you look at bond markets, the long bonds have been coming off as well. So risk assets, if you like, seem to be not too concerned with what's happening, but the currency markets and the precious metal markets seem to be pricing in that concern.
Right. So, Jonathan, on the basis of that premise, what should the India equity investors do in terms of a portfolio rebalance, if at all?
Yeah, I think so. I think the comments you were just making about metals and to a lesser extent energy, I think obviously commodity players, the miners and the metals have been performing extremely well, particularly globally as well, the metals and miners, gold miners, etc. And part of the reason for that obviously is a weaker dollar. And that's obviously still, that's an area we certainly continue to deploy capital to. We think the commodity space generally looks attractive. I think oil is a bit more difficult because, as you were just talking about, supply concerns around oil, but clearly oil remains, has a large element of a hedge against geopolitical risks but which for the time being don't seem to be too concerning the markets. So oil aside, I think certainly investors should still look to be having a decent weighting within metals and mining, and the whole value side continues to look attractive. Although obviously global markets are still being led by tech and US technology stocks generally.
Jonathan, where do you see? How do you see metals and that entire play? Because we've seen plenty of zing on those metal counters, at least back here in India. and you have a good pulse of the global marketplace. Do you believe that India can remain insulated and some of the domestic companies here could still see some bit of upside? Trying to understand that.
Yeah, look, I think, obviously, broadly speaking, pricing for the underlying commodities looks quite attractive here. You were talking about copper earlier, hitting new all-time highs. That's obviously going to have beneficial impacts on domestic Indian companies who are extracting copper. And although I think when you look at copper, the more recent short-term price moves have been driven by supply disruptions as opposed to buoyant demand. But I do think, yes, the space generally, the metals and mining space still looks attractive. And historically, valuations are nothing to be too concerned about. And you know what? Globally, a lot of investors who have and still continue to have very high weights in US technology stocks have started to deploy some of that cash into more value sectors. And obviously, I think the metals and miners are benefiting from that and will continue to do so.
Last quick question with regard to premiumization. You obviously are of the view that premiumization is a good play where India is concerned. Any specific pocket there that you are preferring in that as part of that play?
Not particularly. It's obviously from a consumer goods perspective, that's a very long-term trend which has been happening and continues to happen. And the interesting thing, I think, is back in the day, I think most people would look at MNCs as the primary beneficiary of that. But now clearly, particularly within India, a lot of domestic players have come into that space offering premium products as well. So that's been a positive story for the Indian market. But yeah, I think it goes across the board. Quality is going up. I think consumers are being more discerning. Price is clearly still very important, but certainly quality is getting more important. And I think the trend, without getting too sector specific, the trend still has a lot further to run.
Makes sense. Okay, just looking at the market construct right now, and let's analyze what's holding out. And while, of course, metals are the ones which are gaining ground, there's also Unilever, SBI, Asian Paints. Some of the consumption spaces are the ones which are perking up. And Nestle as well is making a little bit of an attempt to actually claw back into the green and putting on more weight for a Titan and from an Indigo as well. Kapil, any trades when it comes to pure FMCG or staples?
Yeah, last couple of days, we've seen that there was some sort of deterioration that has happened, but the Tata Consumer is the one particular stock that has stand out quite well. Today, it is trading quite of the negative to means 0.6, 0.7% is negative, but I find structurally this particular stock in a good shape. Right now, the 1136 level it is trading. So around the 1120 stop loss as a stop loss, we can see the upside momentum on it. And on the higher side, the upside potential can be up to 1160 to 1180. Tata Consumer stands out.
Very quick break on that note. Let's see where this recovery actually takes us. But remember, it's the beginning of the month, and that often marks key financial activities, salary credits, bill payments, and planning expenses. But just as we plan our expenses, it's equally important to plan our investments as well. To encourage this habit, SBI Mutual Fund, in collaboration with the Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. As part of the campaign, we're observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones.
Welcome back. We're tuned in from the SBI Live studio here on Closing Trades on ET Now. Jonathan Chazelle still with us. Jonathan, what's the sense like with regard to US markets? Because those have really run up and they're holding up in the hope of rate cuts, which are expected. but how likely in your opinion, and talk to us about valuations, because in terms of market cap to GDP, the ratio is really skewed.
Yeah, so I think, we've all seen some pretty frightening charts comparing current valuations with what we saw back in the 2000 bubble, at a sort of similar-ish level. I think on the one side, when you look at the tech companies that are clearly leading the whole and keeping the markets higher, we all know they're extremely profitable businesses, well-run businesses, huge monopolies, and it doesn't look like that'll change anytime soon. I think the concern for a lot of investors is clearly the huge capex boom that's underway in the whole AI space, and whether that capex is likely to ever generate a material return compared to what these companies have used to being earned. That's the concern. I think for the time being, markets are sort of, can easily drive higher. The key factor that we're looking out for, as you mentioned, all has to do with rates and inflation. Certainly, if the dollar does continue to weaken off, then and everything that's going on in the US, inflation still looks like it's fairly entrenched and could easily move higher, according to most of our models, going into next year. So the likelihood for rate cuts is probably, the market, I think, was initially pricing in too many cuts. That is slowly being undone. But the key thing to look for is what's going on long-term yields, and long-term yields, if they start pushing higher, then I think that could be the signal for a steep correction in a lot of these high valuation US stocks. But all in all, for the moment, I think the market can go higher and grind higher for the time being, but there are warning signals clearly out there.
Right. Okay. That's the red flags around the US equity markets right now. For now, Kalyan Jewellers, that's one name, which has perked up a good 5.5%. An idea, Kunal, your top trade for the day is sitting pretty with over a 3.5% gain.
Yeah, I think this is a very big breakout for Vodafone Idea, which we were discussing earlier also, that the stock is due for a much more bigger upside. It's been showing a lot of potential, and positive signs over the last few days. But I think after today's move and the stock coming back to a breakout at that 9 mark, I think it now looks very attractive. So we'll stand by with the target of 9.5 to 10 at least over the very near term for Vodafone Idea.
Okay, that's Vodafone Idea that Kunal is talking about. If we can have that intraday chart. Kalyan Jewellers, of course, is a buzzer, but that's Vodafone Idea, which was a buy call from Kunal, and it's now sitting at the high point of the day. 883 is where that stock is. But Kapil, any buzzing ideas that you're spotting in this market? Anything from the mid or the small caps?
As far as the metal stocks are moving higher, so within the metal space, there is one particular stock called as an Infra, Indian Metal Alloy Company. So this particular stock has showing the good strength, and across the total market cap and the metal sector, this particular stock is ranked 1 over here from the price performance perspective. So right now the 1167 is the level for the stock, and here we maintain a bullish stance over there. After the couple of consolidation patch, it is showing the bullish continuation sign. So we remain positive on that particular stock with the stop loss of 1140 level, and on the high side, the upside potential can be up to the 1240.
Okay, Jonathan, I'm told we're going to have to let you go, but just one quick question if I can squeeze in. Give us your sense with regard to where gold and silver is concerned. We've seen a very strong rally in both those metals. What next? And does silver look better from a risk-reward standpoint even now, is what I'd like to get a sense on.
Yeah, so I think, gold price is quite frankly extraordinary. And I think the factors that have driven it higher are all still in play. Central banks globally are diversifying their dollar holdings. Obviously, the inflationary backdrop for the global economy, geopolitics, all these factors are still in play. And obviously, the icing on the cake is the dollar and people losing faith with what's going on with the US dollar. So I think gold can still certainly grind higher. It looks fairly overbought, and you could argue just as much as people have been talking about a bubble in US tech stocks, there's a bubble in gold. But as we see with most bubbles, they can push a lot higher before they eventually correct. So we still do believe there is upside to gold. Silver, and you look at any historical chart of the gold-silver ratio, and silver certainly has a lot of catching up to do. Obviously, silver does have more industrial uses and wider economic uses. So there are linkages with the global macro that perhaps in the past have kept it, more recently kept it from underperforming versus gold. But silver also, still is providing a role and a function, and certainly a lot of silver miners, etc., have, and obviously the spot price, I think probably does have in the short term more upside potential than gold. But we still do think gold looks attractive for the time being.
Right. Okay, Jonathan, great to have you on the show. We'll let you go on that note. Thanks as always for your time. Just some other buzzers in trade, and we've been pointing out a Kalyan Jewelers. Look at a Navama that scaled up a good 3.6%. The solar industries, which is higher by 3.5%. But it's important to mark the weak end of the market as well. Look at Max Healthcare, for instance. That stock is lower by 4%. There's Lodha, which is down 2.5%. Sammaan Capital, which is now pretty much around the day's lows, about a 2.5% cut coming in there as well. Coal India, after their output numbers for the month gone by, and Chola Finance are all seeing some weakness trickle in. Kunal, on that note, I want to revisit your call on real estate, because stepping into this week, you were of the belief that realty as a pack is looking the weakest. Do you still hold that view?
Well, absolutely, yes, Aisha. In fact, the weakness coming back into Prestige, Macrotech Developers, or Lodha, the underperformance which is there into the the tier 2 names from the real estate pack, that makes the case that we are looking at a second round of a correction for the real estate stocks, and the underperformance will continue. Now, interestingly, as a sector, we've seen that whenever a sector goes into an underperforming spree, case in point, the media index, the IT index, we've seen historically that at least for 3 or 4 months, I'm not saying consecutively, but at least for 3 or 4 months, these sectors, they tend to remain into an underperforming zone. So that's why I would believe that one should not hurry into buying these real estate names just because the price looks attractive, or maybe these stocks would have fallen by 5-10%. I believe that a major turning point is where one should try to wait out for. If the stocks break out of their swing resistances on the hourly charts, that will be the first trigger. And if that happens in a cohesive manner, that will be an indication of a breakout. So I believe as of now that realty or the real estate pack looks to be an underperforming sector. And I think one should stay away from it, at least from a trading or a momentum play.
Kapil, your take with regard to some of the banks that are out there, especially on the private side. You've got banks like a Kotak, which have done fairly well for themselves over the last few trading sessions. What's your sense?
Yeah, right. Means private sector banks, off lately, they have started to pick up the momentum quite well. Kotak Mahindra Bank is a one particular stock. 2 days it has been moving on the high side and got out of the range. And 2060 was acting as a resistance on a couple of the occasions, and the price has moved on the high side. So that is a positive momentum that we see in. But still, the moving averages are quite compressed over here. So rather than chasing the momentum, I will wait for that some sorts of retracement again happen in the 2060 level, and then it will be a better risk reward setup over there. Along with Kotak Bank, I also prefer the ICICI Bank as well. Even the stock today didn't that much well, but since 2023 onwards, whenever the correction has happened in that particular stock, the corrections profile was near about by 10%, and followed by that we see the uptick in the stocks. And recently the 10% correction happened, 200 period moving averages there. So I find positivity in the ICICI Bank with a stop loss of 1345, and on the high side positionally 1430 can be the upside.
Okay, that's the take coming in on some of the banking names. But Kapil, what's looking like the weakest link in the market to you sectorally?
Yeah, as you have already mentioned, so that is in a reality sector has remained under a performance for a good period of time, and we continue to remain bearish on that particular thing. And the Lodha is the one particular stock where we have the negative construct on that.
A couple of other buzzers, Kunal, in trade today are JK Paper and EIH. JK Paper was up 8%. EIH surprisingly also up 8% in trade. Give us your take on a couple of those.
So EIH was interesting because I do track the stock, out of the two, And I think in 2025, June, July, the stock had managed to break past above a multi-month swing high when it managed to break the levels of 400 and then followed a steady uptrend towards 420, 430 mark. It was just that the last or the second half of the month of September, the stock had gone through a very different kind of a correction, something which the stock had not seen over the last many weeks and many months. It was a very gradual correction on the back of very low volumes or the volumes dropping down significantly. And this comes as a more of a resurrective move back for EIH Hotel. So I think this now puts the stock back into the fray of retesting the previous highs of 420 to 430. So that correction which had happened on very low volumes, that was an indication that the stock was just going through a mean reversion. And that I believe is now completed. We could be looking at the stock hitting levels of 420 to 430 near term.
Interesting. And what about Max Health? New entrant on the Nifty 50, stock down nearly 4%. What's the sense now?
Yeah, it looks weak on the charts, but generally we've seen this, Harsh, that when stocks enter into the Nifty 50 basket, they tend to behave into a very different manner in the first couple of days.
Yes.
So you give them a week to settle into, because once funds start to be bullish on the indices, you naturally have to have an exposure towards Max Healthcare as one of the stocks or constituents on the Nifty 50.
So good time to buy that?
It could actually be a good contra time to buy. So the charts may be weak right now, but just because if the sentiment starts to become bullish on the indices, this could be a good contra level.
Very interesting.
Oh yeah, absolutely. In fact, it's one of the key buzzers or rather weak movers today. In fact, it's the top drag on the Nifty. It's almost closing in with a 4% decline. But Kapil, we'll let you go on that note. Kunal, thanks for your time as always. Two metals, that's really been the one of the strongest movers today. Tata Steel, Hindalco, you've got Nalco as well, which has held out very strong. And even SAIL, for that matter, has had a good last week. Axis Kotak, from within the large cap banking names, they've done good too. L&T closes in with almost a 2% gain. BEL has looked very smart. There's been JSW Steel, Bharti, Titan, Interglobe Aviation and Bajaj Auto, which have been the strong movers today. On the flip side, there's been weakness on not just a Max, but even a Coal India for an HDFC Life. Maruti actually closed in the red, about 1% lower. ICICI Bank, Reliance, M&M, TCS have all been your weaklings today. But better a day, Harsh, for sure, for the broader end of the market, right?
Well, yes. In fact, the broader end has outperformed. The advanced decline also tilting in favor of the advances. The Nifty mid-cap doing extremely well, 0.8% higher. The Nifty small-cap also 0.7% higher. If we can pull up the intraday chart, that will also reflect the way in which the move has happened. Slow, steady and upward trending. So that's the positive. Let's pull up definitely the advanced decline if we can. And that will give us also a perspective on the breadth, which is definitely in favor of the bulls. And that kind of shows you the tilt towards the positivity, at least in terms of breadth. The Nifty 50 up a quarter and we've closed there. In terms of sectors, let's pull up the Nifty Metal. The Nifty Auto is one of the key losers in trade today, 0.25% or thereabouts down. The Nifty Bank has done ever so well. Well, the Nifty Auto is in fact flattened as we speak. It's closing absolutely flat. The Nifty Metal 1.8% higher, and it's all looking much better if you're looking at it week as a whole. Because we had a very good move on Wednesday, and this move is on the back of that Wednesday move. So that's where a lot of the positivity will also start to trickle through as we begin next week. But with that, completely out of time on this edition of Closing Trades. From Aisha, myself and everyone who puts this show together, thanks so much for watching. Stay tuned to ET Now. More action on the other side.